So now we move on to the seventh session of the day for the proposed changes in transfer pricing, and I hope everyone remains as energetic as they were in the morning. Joining us, we have Mithilesh Reddy, founder and CEO at Steadfast Business Consulting, as a subject matter expert. Mr. Reddy, Mr. Reddy brings over 15 years of with specialized experience in transfer pricing, advising multinational enterprises on three-tier documents, litigation support, and complication intercompany transactions. His expertise spans transfer pricing structuring, controversy management, global benchmarking, compliances, and strategic advisory related to advanced pricing agreements, mutual agreement procedures, and base erosion and profit shifting. Mithilesh has served a diverse client base across the technology, industrial, pharmaceutical, financial services, and consumer goods services. Welcome, sir. How are you?
Hi everyone, I'm audible.
Yes, sir, you're audible.
Okay, so shall we start?
Yes, you can start.
So hi everyone, this is Mithilesh here. So there are almost around 3 to 4 minor amendments, I would say, but one major amendment which is pertaining to transfer pricing audit as such, in terms of the overall perspective of conducting the transfer pricing assessments in India. But the major revolutionary change that I would talk about is the bulk transfer pricing assessments that they have started introducing. The fact is that most of the assessments in India are being done from 2 years down the line from the end of the relevant assessment year, which is a fact that they have added the specificalities in terms of updation of the ALP or the documentation during the course of assessments, which will bring everything on a comparative mode or a equitable mode. But the point that was always lacking from certainty perspective was plugged in by safe harbor rules or APA or dispute resolution mechanisms of DRP and MAP proceedings, etc. But ultimately, if you compare global versus us in terms of what exactly are we intending to do right now from the bulk TP assessments or the block TP assessments that I would say is effective from AY 26-27. They are going to propose a 3-year period. 1 year ALP, which is proposed by the TPO, would be applicable for the next 2 years, is the proposition. This aligns with the global best practices or the major jurisdictions, transfer pricing jurisdictions. But the fact is that the block TP assessments of the globe have been on back foot basis. They take a 3-year or a 5-year period, which is of the past. But we are talking about a forward period of 3 years because of the fact that we are on a timeline basis 2 years slower than what we were supposed to be in that I would say. But this is a very good amendment, especially from certainty perspective, especially from captive units perspective, where there's not much change in the functionality. So globally, it's a very widely used practice, the block TP assessments. But in India, compared to the earlier 3/2016 notification, which talks about the specific reference to the TPO versus a certainty model, which is being adopted right now from a block TP assessment mode, would be that the CPC, when it picks up a particular case for a scrutiny and sends it to a TPO or a transfer pricing authority, there was earlier a notification or a risk parameter based assessment which was being followed. Under this specific notification, wherever there were transactions which were not disclosed, wherever transactions which were not adopted to be at arm's length from the disclosure standpoint is concerned, or wherever there is inconsistency between the numbers or a comparative mode as per the RPT schedules, or there is complete misalignment of the transaction itself, it was the prima facie pickup. But during the course of search or any specificalities, wherever search and seizure proceedings or survey proceedings were happening, the prima facie underlying evidence or the prima facie underlying transaction based on which the search and seizure was initiated were the cases that were referred to the TPO. Now, it's with the assessee to choose that he wants to get assessed for the next 2 years with the ALP that is determined by the TPO in the first year. In the block of 3 years that starts from AY 26-27, the assessee can select and adopt the same ALP for the next 2 years. It looks, very exciting and, it looks very rosy, but there are a lot of ifs and buts in this process, or there are a lot of questions, unanswered clarifications that might be answered during the course of this bill presentation or during the course of the notifications that they might announce. So yes, it's a welcome move, but there has to be a specific procedure, timelines, and the methodology with which the guidelines have to be announced and implemented. So hope I'm clear with the prima facie aspect of it. Now just take a move back and see how the global TP audits and the India block provision analysis is being done. So as I told you, global TP audits are basically focused on the risk-based or the parameters that I was talking about. Specifically, if they are picked up for a block, they would go back specifically for a period of 2 to 4 years or 3 to 5 years max. So even in the recent TP jurisdictions like Saudi Arabia or UAE or any other jurisdictions which are come up with the TP provisions of late, there has been a 5-year period that we have kept in the ZACTA guidelines as well. But the point that I'm trying to tell you is, we were always the single year assessed country, or a single year assessment proviso was there in the under 92 CA, and the specific arm's length determination was also done on year by year basis. But in comparison to the global guidelines or the global methodologies, they have adopted this block assessment, but global goes backwards. We are going 3 years forwards. Now, the overall perspective with which they have done and the methodology with which this is to be implemented and the effectiveness and efficiency levels compared to the global are to be ascertained. Now, if you see what exactly will be advantages or disadvantages to the assessee, is the fact that it reduces the time burden and the costs incurred for a 3-year period where the documentation, consultant fees, and the entire burden of running around would not be there. But from a year-on-year perspective basis, and from an applicability of the same terms and conditions, the functional analysis and the comparability, arm's length perspectives being determined from overall basis have to be kept ready by the first year assessments, and we need to have a compliance readiness as well. So the compliances pertaining to TP documentation have not changed. They have not removed any or amended any of the 3CB, TP report or master file or CBCR threshold limits. They have only kept the assessments, clubbed for a 3-year period. So now this brings us to a specificality to look after the ALP being determined. If I can go back to 2015 notification where multiple year data was taken into consideration for the updation of the comparables or the arm's length price determination, there was a 3-year period for which you need to arrive at the comparable arm's length price in the documentation itself. Earlier, there was a single year period with which we used to do, but after 2015, that is effective from 2016 onwards, there was a 3-year multiple year data and weighted average and a range concept that was introduced into the Act on percentile basis. So they are slowly adopting the global methodologies and making sure that the 3-year period brings to the light the entire forward assessment and keeps the tax collections also certain. And there is no doubt that this is a welcome move, but the administration, implementation, and the way in which these adoption and evaluation mechanism will be done is the question. So from an assessing officer standpoint or a TPO standpoint, he would be required to check the terms and conditions. He would be required to check the functional analysis with the same associated enterprise is what is being mentioned in the Act now. If at all he adopts the same transaction with a different associated enterprise, it's not clear. They've just mentioned the same enterprise or the same associated enterprise in the entire language of the amendment. So if the same transaction in a different jurisdiction is being adopted with a group company or an associated enterprise, it would not be covered in this adoption. So from overall period perspective, there are certain expectations, there are certain timelines based on which these amendments are required to be implemented, or the questions would be answered. So we have kept 10 to 12 pointers on screen, which would be the determination aspects or the evaluation aspects that are to be clarified from various angles. So the declaration filing deadline has not been mentioned, but the TPO, once the assessee adopts this methodology or goes for a block assessment and adopts after the first year TPO ALP determination, TPO has been given 30 days timeline to decide and evaluate the next 2 years as well. But the timeline for the adoption of block assessment on the first year end, the assessment year 26-27, the first year end would be 31st January 2029. So by that time, they have to analyze the next 2 years and whether the TPO ALP that is being determined as on that date can be adopted for the next 2 years. Assessee has to take a call, he has to adopt, and then the overall perspective with which the TPO has to evaluate and give them the orders is the next 30 days itself. So this procedure needs that clarity from a timelines angle from assessee standpoint. From TPO standpoint, it is 30 days. What is the withdrawal of excised option? Is there any form and manner in which I am adopting and the TPO is rejecting my adoption and says that there are changes in the terms and conditions, there are changes in the functional analysis, or the assessee himself wants to withdraw, or is there any appeal mechanism with which the rejection of the adoption is to be done? All these aspects are yet to be clarified. From a TPO examination standpoint, from an overall subsequent year perspective, as well as the parameters and critical assumptions perspective, if we see APA, the year on year at which the annual compliances after the APA is being signed, we kind of file the terms and conditions or the adoption assumptions with which the APA has been signed are being followed or not to the TPO. Is there anything of that sort that they will come up with on a parameters perspective that the TPO will establish in the first year TPO order, and this will be followed for the next 2 years? Is the specific question that is still unanswered. Now, from a single transaction, from a multiple year transactions is concerned, if it is a captive service provider from services segment is concerned, it can only be a single transaction or an outstanding receivables at the max. But if there are multiple transactions, or if there are n number of related parties in multiple jurisdictions, when the ALP is determined for each of these aspects, from aggregation versus segregation angle is concerned, each transaction is being determined with a specific ALP, then the confusion really enhances. So if I am adopting this methodology only for a single transaction among my multiple transactions, will the TP reference or the 3/2016 apply for the rest of the transactions? Am I still going to be assessed for the rest of the transactions for the next 2 years? Or how the partial selection of this risk-based assessments will still go on is yet to be clarified. So this part is the most vulnerable aspect of among the transition period is concerned. Once the first block is completed, after that, I think all these questions and the relevant aspects of single versus multiple period, updation of comparables, and the TPO perspective of how the critical assumptions are going to be evaluated will be clarified. So pending APA cases, say suppose I'm still due, I'm about to file 2 APA cases application, and by the end of 29 or by the end of 30, I am having the last year that is being covered by the APA. So I have not yet got APA signing done. For such kind of cases, if I go for a block assessment, then my entire APA period that was pending or partial period that was not being covered by the APA, is it still going to be assessed or not assessed? Or how long will it be kept open from a going back perspective is concerned, even under search and seizure proceedings, is the vulnerable aspect. From various scenarios, if you consider these questions, the most interesting part will be, say suppose the TPO has selected or adopted a 17% arm's length, and this particular arm's length, the assessee has said that I am going to implement this for the next 2 years, and he has applied for this adoption. Now the assessee is at 16% for the second year and 17% for the third year. For the second year, if he's going to do a voluntary adjustment kind of a scenario, whether he's required to bring in that secondary adjustment and clubbing of these provisions or the amendment to the respective provisions of the secondary adjustments and the differential updation of income tax return, or the specificality of adding that particular differential component also would be required to be analyzed. Comparison, where from a block assessment provision or from a TP compliance provision, an APA and safe harbor, we have done a tabulation at the end. I will come to this point at a later part of the presentation. But overall level, there are certain minute questions that would be really interesting when gets triggered during the course of this implementation. From an impact assessment standpoint or a pending cases at a higher forum standpoint, if at all I'm going to adopt any of these ALPs that are being determined for the future years, is there going to be anything that will be seen as a precedent by the appellate tribunals or the commissioner appeals or any other higher appellate forums, will be specifically required to be subtly mentioned that this precedent, this should not be taken up as a precedent and it should not be impacting any of the past forums. So this analysis on the overall basis will be the key, and specificalities being amended for each of these provisions are the most important provisions that are expected to be announced. From an updation of benchmarking, I just said that single year versus multiple year, and also the assessee was allowed to update his benchmarking during the course of TP assessments. Whether this particular aspect will still be required to be done for the next 2 years, where the TPO would be implementing the same ALP, whether he's going to do or run the search process for the next 2 years, whether the assessee himself has to provide the basis of that 17% being correct for the next 2 years, or how the updation of the benchmarking is required for the justification also needs to be analyzed. Whether this is required or not required, that subtle change or mention is required by the government. Now, from a TP documentation requirements is concerned, yes, there is no change in the compliances, but whether the revision of a TP documentation or updation is required or not is the same point. Now, from a compliance of assessment standpoint, till now, there has not been much of a sound or a evaluation that has been conducted by any of the master file filings or the country by country assessment is concerned. From overall global assessments from India driven angle is concerned, either from an inbound or outbound perspective. But from this block TP assessment perspective is concerned, whether there is going to be any sea change that is required to be adopted for the master file assessments, or is there anything that the government is looking at changing the entire portfolio of assessments from these two evaluations is concerned for bigger portfolio of companies which are applicable for master file and CBCR provisions specifically. So these are the points that still require guidelines or clarifications, and there are multiple angles with which these questions needs to be analyzed. So if you take a small example of when the compliance would start of this block TP assessments and how the specificality with which the action points are required to be taken up for evaluation, the timeline for adoption of TPO ALP and the period and procedure of adoption of this ALP are the key questions. So if you see in the example, AY 2627, the form 3CB or the ITR, if it's filed by November 30th, 26, receipt of the first notice, let us assume from AO or TPO, starts with July 2027, and the exact timeline for the TP assessment ends at 31st January 29. Whether during the course of this period, the adoption or the specificality with which the TPO order will come out, whether this period is itself the indication that you can adopt and go for the adoption of this procedure of block assessment is the question. So the possible request of the multiple year assessments is before the appellate proceedings timeline of AY 26-27, or he should do it during the course of the TP assessment of the first year, is the question. So from that time, 30 days timeline to the TPO has been provided. But when the adoption of this particular block TP assessments is to be adopted and intimated to the TPO is not specifically provided anywhere. So from the 3 years angle now, if it is being looked at from an overall basis, so continuing with the same example, if say suppose my AY 26-27 gets concluded at 31st Jan 29, and assuming that the TPO ALP we got to know on 31st January 29 for the first year, I like the ALP and I want to adopt it for the next 2 years also. But second year is decent enough where I'm already closing my books and providing the ITR and 3CV by 30th October 27. So by 31st January 29, while I get the TP order for the first year, I would have closed my books and I know my margin that I maintained as on 30th October 27. So by that timeline, I know whether I can go for the TPO ALP or not. But for the third year, I'll have to do the 30th October 28 filing, and immediately by 31st Jan 29, that 3-month or 90-day timeline, I have to do the compliance. So for all the 3 years, I will be knowing my margin by 31st Jan 29. And the reason and the timeline with which they have kept this intention is now currently AY 22-23 just got finished by this January 29. So there is another 2-year period within which the TPO assessments will be completed. And AY 26-27 and moving forward will be the specific year, 26 financial year, or after 26-27 maybe the period in which the next 3 years block will be over. So for whomever are adopting these assessments, they will have to take a call within that brief period on and around the 31st January 29. So the books closure of the second year and third year and the margin at which the TPO is determining by 31st January 29 are the key dates that are required to be kept in mind. So for the second year, I will be ready with my books. For the third year, I'll be ready with my books and filing by 30th October 28 itself. So they have kept the intentional provision of the next 2 years by the 31st Jan 29 is the interpretation that many of them are evaluating. And this is the specific example that was discussed among the PCIDs as well from a TP assessment standpoints are concerned. But overall level, if you see the 92 CA 3B amendment is clearly intimating a certainty among the block assessments of the transfer pricing. But the block rate or the ALP at which you will be knowing by the end of 31st January 29. So you have to adopt a margin as and when you are already experiencing the TP assessments or already knowing what would be the magic number that would satisfy the TPO or fall within the arm's length range, and the exact median with which the TPO is going to propose the ALP from a TNMM perspective is concerned would be the key indicator. So this requires a lot of analysis, and specifically for people who are planning to go for a block period of 3 years, your range indicators and the specific margin with which you are going to file for the first year and planning to do for the next 2 years also will become a key perspective. So the evaluation would be done for 3 years at a time, and margin adoption and implementation, books closure, everything has to be done by 30th October 2028 to go for this block assessment and implement it after 31st January 29 or in and around that date. So it's only a 30 days timeline with which you can push the entire 2 years also. So if you look at the overall perspective with which these parameters are generally being looked at, safe harbor rules, advanced pricing agreements, the regular scrutinies that were happening from TP assessment standpoint right now, and what is the proposed block period assessment period is concerned, the biggest advantage is certainty. Yes, low cost, because people were going for either a 1-year safe harbor. Earlier, the safe harbor rules were also for 3-year period around 2016 in the first block that they have announced, but they restricted the adoption to only 1 year, specifically for the reason that they are not knowing what is happening in the second year and third year. and it has come to the notice of the most of the TPOs that whatever margin that they're giving and adopting in giving that block safe harbor rules, they've kept it specifically for 1 year from a definition, from functional analysis standpoint and the coverage standpoint and the volume of the transaction standpoint. They had to do it, but after the end of the books closure or the compliance. So immediately after you file your 3CB for any year, you are given a specific timeline of 30 days, 60 days for you to go for the safe harbor regulations. And the TPO is required to give back the answer, or if he doesn't give the answer, the safe harbor rules will be deemed to be implemented. That is the current state of safe harbor rules right now. So earlier it was 3-year period. Now it is only 1 year. This specific amendment was brought only because of the reason that what would happen to the next 2 years, how are we able to decide right now was the question. Now, whether or not the same question will come in the block assessments also is the key question that is required to be evaluated between safe harbor rules amendment that was brought in during the 2016 to 2019 period is the key question that many of them are asking in the analysis programs that we are conducting. But from a overall perspective, this is a welcome move because if you know that there is not much of a change in the functional analysis or in the terms and conditions or with the same AE you are going to do, the certainty will easily improve. And in comparison to the cost, timelines, and the effort and the entire administrative wastage that is being done among the APA provisions versus the block period of 3 years, it will be a very good program, provided how is the methodology of assuring the next 2 years prospective period is the key question that requires to be answered from a comparative perspective of safe harbor rules versus the proposed assessment of block period. So if you see the last point, the negotiation standpoint was never there for safe harbors, which will be the same if you are adopting for the TPO ALP directly, of course. But APA will still have this advantage of proposing your benchmarks or proposing your working capital adjustments or the specific amendments that you want in the APA agreement. So that is the only advantage the APA is left with when compared to the overall evaluation is concerned. So APA would generally cover a 9-year period, 5 years forward, 4 years backward. But other than that advantage of 9-year block and the negotiation aspect being on the table, there's not much of an advantage that I'm looking at people going for APA anymore if they are going to make this block TP assessment provision successfully. So this is the comparative that we could think about from overall perspective of different programs or assessment standpoint is concerned of the past and the future. From a certain seizure standpoint, most of the questions were coming. When does a specific case get referred from the central circle or the search and seizure assessment block period is concerned to the TPO? And when it is referred, whether the income that is being evaluated, whether the arm's length that is being provided by the TPO is to be considered under the normal provisions, or it is to be considered under the special provisions of 60% or any other higher tax brackets. Now, the amendment which is brought about specifically is the fact that the evidence during the search was the specificality before the amendment. Now, they have specifically included the word income from the international transactions, and they have made sure that this income which is being evaluated and brought to assessment should be taxed under regular provisions. It's a very good amendment, and this was being subjected to a lot of confusion during the course of the search and seizure proceedings, especially when the underlying transaction was international SDT. But the overall period with which the block assessments of the past versus the block assessments of the TP future 3 years is still a different concept altogether. 1+4 backwards, the search TP block search assessments will be conducted, the block assessments. But going forward, block TP assessments are for the future of 1+2. So 1 year for current 26-27 and 2 years going forward is the key. So timelines wise, the specificality tax bracket wise, and the inclusion and exclusion angle and specific provision of income and not the evidence is the key parameter C change that they have brought about. So from overall perspective, if you see earlier from a risk assessment standpoint is concerned, 3/2016 specifically used to mention the last phrase I would read out, wherever search and seizure proceedings have been carried out under the provisions of the Income Tax Act and findings regarding transfer pricing issue in respect of international domestic transactions or both have been recorded by the investigation wing or the AO. That was the specific mention in the notification. So wherever there is an underlying transaction and there is a record that the investigation authority is mentioning that this is the major reason and there has been an escapement and there has been an intentional undisclosure, non-disclosure, is the fact that they would refer, the reason for reference would have been this specific point. But now the reference point is not specifically being changed, but the impact with which they are going to change and the inclusion, exclusion, and where you are going to subject it to a tax rate are the key changes that have been proposed as a clarificatory note. From a safe harbor perspective, it was mentioned in the speech or by the by the speaker, Honorable FM, that the safe harbor rules will be rationalized in terms of expansion of the definition, in terms of expansion of the coverage of industries, or the intention is to rationalize them as well. But the question that still gets unanswered is the reduction from 3 years to 1 year of the safe harbor earlier versus 1 year to 3 years of TP assessment are the key changes of how the government is going to justify is the key question on the overall coverage of block TP assessments angle is concerned right on the day of the first year end. But from issues being identified or the relevant representations being made, there are several industries or the definitions which are making it as an obstruction to this program overall. So if the definition part is being evaluated only from a intercompany agreement coverage is concerned, that would be a wrong aspect. And maybe they're going to announce a site visit angle also is being discussed. And maybe it will be clarified by the bill or any other provisions of the amendments to the 92 CBA or the Rule 10D. From a faceless assessment standpoint is concerned, there were a specific deadline with which the implementation of the TP assessments, faceless TP assessments were also being implemented, or 31st March 2025 was a specific deadline, but they've removed this deadline in the specifics and they made sure that the intention of moving TP assessments toward the faceless scheme is no more. And it might be a hybrid or it might be a complete physical thing is yet to be clarified, but it is clear that they're not going to change it to a faceless scheme. So I think I've covered all the aspects of TP assessment or the TP provisions amendments in this budget. So handing over to you, Cynthia, Taxmann team.
Thank you so much, sir. It's a pleasure having you.
Yeah, thank you.
So there are a couple of questions. Should I take it?
You have time, you can take it. No problem. Yeah.
Yes. The first one is, can SSC change the TP method in next 2 years once he exercised the option of newly proposed safe harbor rules?
See, they've only mentioned that TPO ALP that is being determined for the first year will be adopted by the SSC. So it means that there may not be a specific flexibility in changing the method as such when they are specific to sticking on to the ALP being determined by the TPO. I think it should be the same approach with which the TPO will determine. So it's not our methodology that we are going to present. So we are going to stick to his ALP, and the way in which it might be done also mostly was intending towards TNMM. So I'm not seeing any other method intention coming in. RPM can also be a specific intention, or PSM can also be a specific intention. But the point that I'm trying to tell you is they made the language as ALP. They never mentioned anything specific to method as such. So there is not much of a flexibility that I'm expecting. So it will be the TPO's methodology that you have to replicate for the next 2 years.
Okay, correct. The next query is, do you think the advanced pricing agreements will lose their shine after the introduction of safe harbor rules in TP?
See, APA was always a very good program, intended program by the government. If you see in comparison to the global APA versus the Indian APA methodology, we are, having almost around, 100 plus or 200 plus cases only pending from Hyderabad, which are yet to be, adjudicated. But the point that I'm trying to tell you is the methodology requires administrative support. So there is not much of a support that is being announced or provided by the government. So that's the only reason. And the cost was very high. And the timeline at which the closure or the rate of closures were also being, very, very slow. So the rate at which they are going to announce the APA after 3 or 5 year period of the efforts are also very high. So these were the limitations with which it lost its charm. But I'm definitely sure that the safe harbor rules, rationalization, and 3 year block period will hit the number of APA applications for sure. So it's going to be a good impact to the APA. So they're going to be a setback is what I would see.
Okay. So there's one question in the comment in the chat box, that is, in a block assessment, if a SSC has say 5 different international transactions and opts to go for a block assessment for 2 of them, given that the same are ordinary or repetitive transaction, can the SSC choose to go for APA for the remaining 3 transactions?
So that's what I presented during the clarification that are yet to be announced. So single transaction versus multiple year transactions, whether you are allowed to do a partial block assessment and adoption for a few transactions among multiple is the key question that is required to be answered. I think they will come up with the clarification. It should be made available to the SEC.
Okay. Let me check. Is there any other query? Anyone, please drop your queries in the chat box. So there's one general question, that is, the focus of government is to simplify the Income Tax Act. What, according to you, with a focus on the new income tax bill, will be introduced by the government in the next coming days?
The overall idea with which they're going to announce the new bill and the implementation might be to, simplify it. But there are a lot of implications from international tax angle and DTA angle that are revolving in the international tax and TP, professionals. Is the fact that how are we able to justify the MFN clauses or the DTA provisions in comparison to the Income Tax Act and all the agreements that we have already signed globally, and how is it going to be rationalized in terms of the language angle is concerned is the major question. So there may not be a sea change in the way in which they are going to administer the law from tax collection or tax rate angle is concerned, except for reducing the tax rates and making it easy for the public. But from administrative angle and assessments angle and transparency angle, certainly this government is going to make a major change is what is the expectation. So overall, they made sure that deductions and other incentives, wherever the lacunas are being removed, and they're rationalizing the tax rates. So that's the good area. But the uncertain area is how are we going to clarify still the interpretational issues or the jargons and the way in which the law is being interpreted by the tax authorities would only come from practice of the law that is being preached. So we have to wait and watch.
Okay, so there's one more general query, that how would you rate this budget proposed by the government recently?
See, it's a very good budget as compared to the last 9 years or 8 years that this government has done. So especially from the personal taxation angle and the deductions angle is concerned, or the rationalization of tax angle of the middle class is concerned. But overall level, if you see, they are moving towards the global practices. They are adopting the global methodologies on one side. They're also making sea changes in the personal taxation and making the public also happy. The mid part in terms of the collections or the VSV schemes, which are being implemented every 2 to 3 year period, is also an indication that they want to close all the pending assessments and the overall period that is being allowed for the tax litigation angle is concerned. So they're not interested to keep so many cases pending. So the deadline with which they are intending to close the overall process is very, very commendable. But the way in which the tax authorities or the department angle or the bureaucratic angle is being implemented from faceless mechanism is concerned has a mixed review. But specific to TP and international tax, if you ask me, this is a very good perspective with which they have done the amendment. So I have mixed reaction, but this budget specifically is a very good budget in compared to the last 9 years.
Okay, perfect. So there are a few more queries. Should I take it?
Yeah, you can, if you have time, you can please.
Okay. So another is, what are your suggestion on transfer pricing for the upcoming new income tax bill to government?
So I would say most importantly, the safe harbor would be the key for me, because we have to be very clear for the global companies or MNEs that are coming to India, and there has to be absolute certainty with which you are going to implement the law. If you see in comparison to UAE, which is very recent for transfer pricing assessments or TP provisions implementation is concerned, they have given a very detailed guide on each and every aspect of law. We do not have that. So the point is, when you keep the provision in few pages and leave it open for interpretation, it leads to this litigation. So why don't we create the general guidelines and expectation very clear by giving a guide by the government itself and making it very clear on what the intention is and what's the coverage. And there should not be a absolute, it should be very clear from interpretation and execution angle is concerned, and thus it becomes certain. So that confusion angle should never be there is what my idea is. So wherever all these confusions or expectations will come and are going to come should not be there. There should be an absolute deadline with which they come out very clearly on the transfer pricing guide. And I hope to see it very soon, if at all they are going to consider all our queries or the expectations or the recommendations. I think it will be fantastic.
Okay. So there's one more query, which is related to personal taxation. Can I take it?
I'm open, but if you want me to take this, I'll take it. No problem. Yeah, please.
Okay. So as the government is focusing on new tax regime and coming up with the new tax bill, do you think the old regime will be scrapped off in the coming years?
Yes. I'm open, but if you want me to take this, I'll take it. No problem. Yeah, please.
Okay. So as the government is focusing on new tax regime and coming up with the new tax bill,
I think there were some problems in here. I think Sandeep sir is already.
okay. So as the government is focusing on new tax regime and coming up with the new, I think there's some network issue. Let me check.
I think Sandeep sir's mute was the problem.
Yes.
I think you can take over to Sandeep sir now. Yeah, please. Yeah.
Okay.
Thank
you so much, sir. Thank you so much. It's a great learning from you. Thank you.